we are set to explore one of the most versatile investment options in the mutual fund universe, that is your multi-cap mutual funds. In a world where market dynamics shift rapidly, investors are constantly seeking strategies that offer both growth and flexibility. Multi-cap funds, with their ability to invest across large cap, mid cap, and small cap stocks, offer a unique blend of diversification and opportunity. But how does this work actually? What makes them different from other equity funds, and how should investors evaluate them in the context of their financial goals? Today we'll unpack these questions and more, helping you understand how multi-cap mutual funds can fit into a smart long-term investment strategy. And to discuss this, today we are joined by Rushabh Desai, founder of Rupee with Rushabh Investment, joining us now. Rushabh, always a pleasure speaking to you. Before I move on to more detailed questions, my first question to you would be, help our viewers understand as to what a multi-cap mutual fund is.
Hi, Mahima. First of all, thanks so much for having me on your show. See, multi-cap category simply means that 25% of the fund needs to be allocated in large cap, in mid cap, and in small cap. So 25% is a fixed allocation, which is a minimum allocation, which needs to be invested in large cap, mid cap, and small cap. So overall, mid and small cap allocation will be around, say, 50% minimum, and the minimum allocation towards large caps will be 25%. Then the fund manager has the flexibility to move around, but at least minimum 25% allocation has to be invested in large, mid, and small cap. That is what a multi-cap fund does.
In terms of the entire universe of multi-cap funds, which one of these funds have outperformed in the last 3-year frame? And from a viewer perspective, how should one go about assessing these multi-cap mutual funds?
Masi, over the last 3 years, 3 years has been phenomenal for the equity markets. We are witnessing a price and a time correction recently from around September, October 2024. But if you actually go to see from a point-to-point return basis, the 3 years have been phenomenal as on date. Let me give you some perspective on the returns. See, on a 3-year returns basis, as on 10th of June, the highest return generated by multi-cap fund, which is Nippon India multi-cap fund, which is at around 28.8% CAGR, and the lowest return generated is around 17.7% CAGR, which is generated by Quant Active Fund, which is a multi-cap fund. So returns have been actually very phenomenal. Over the past 3 years, there are three particular funds which have done phenomenally well, which is Nippon India Multi-Cap Fund, Kotak Multi-Cap Fund, and HDFC Multi-Cap Fund, which have generated 25% plus CAGR returns, which is very, very, very phenomenal in today's time. And if you actually go to see the outperformance and underperformance strike rate, unfortunately, 50% of the multi-cap funds have underperformed, and 50% has outperformed the benchmark, which is the Nifty 500 multi-cap 50, 25, 25 TRI index. So in terms of outperformance and underperformance, the strike rate has been 50-50%. So investors need to be very careful in choosing the right multi-cap fund so that they get higher returns than the underlying benchmark mining.
Understood. And while you're suggesting that one needs to pick the right multi-cap funds, what do you think are the key factors to watch out for while choosing a multi-cap mutual fund?
See, I think, I would bet on a product which is consistently outperforming over the 5 to 10-year rolling returns basis. See, top performers and underperformers keep on shifting from time to time. Okay. As long as the fund is managed by a quality manager, quality team, the AMC is good, the philosophy is very strong, and the product has been consistently outperforming on a medium to long term basis, that is something what I would really look into a product. See, even if, for example, say Nippon India multi-cap fund, which has done phenomenally well, I would still bet on that product because it has been consistently doing well. Outperformance and underperformance is part and parcel of any product, but as long as the product is managed by quality people and quality philosophy, the underperformance will be temporary and it will eventually recover. So I would bet on a product which is consistently performing and may not necessarily be the top performer at all given points of time.
Okay, and in terms of a diversified portfolio, how should you position these multi-cap mutual funds? I mean, what percentage of your total portfolio should consist of these multi-cap mutual funds?
My see, multi-cap mutual funds are very high risk products because it has to keep 50% allocation in mid and small caps at all given point of time. So what if, the mid and small cap doesn't do that great, we have seen prolonged periods of underperformance and prolonged periods where the mid and small caps have given 0% returns, right? So I think a multi-cap fund should be a part of one portfolio. I think rather than creating a full multi-cap portfolio, that is something what I would not suggest because it leads to a lot of volatility and underperformance risk. I think when you create a portfolio, it should be a good blend of flexi cap and multi caps together. But I think just one multi cap fund in your portfolio should do the job amongst the other products, Mahima.
Just one, not more than one, correct?
Not more than one.
All right. And in terms of the risks that are associated with a multi-cap mutual fund, you did mention the fact that because, they are very risky. That is one of the risks, of course, on the cards when you take up a multi-cap mutual funds. But what are the other risks that one must be aware of?
See, the whole point is to diversify well across different strategies and different market capitalization. Going towards one particular market capitalization, particularly mid and small caps, which investors get carried away towards, and rightly so because the returns have been very phenomenal. But again, there is no guarantee that these kind of phenomenal returns will be replicated over the next 3 years. Okay, usually mid and small caps and products like multi cap, which are heavy on mid and small caps, will perform in cycle. So these products will be subject to volatility risk, and these products will be subject to cyclicality risk as well. Volatility means, of course, there will be a dramatic shift in returns up and down, up and down. And cyclicality means, the returns what we saw last year may not be the same in the next 3 years. The returns will perform in cycle. So I think, from a better risk management point of view, see, we cannot manage returns, right? Returns are up to the markets how they want to deliver as per the economic conditions and the earnings conditions of our companies. But something what is in our control is the risk. So I think from a better risk management and risk mitigation point of view, break down your portfolio. Keep your large cap portfolio keep your large cap funds little separate, mid cap and small cap funds separate, and keep a basket of flexi cap and mid cap. So while creating a portfolio, see, assuming an investor falls in the high risk category, and assuming the investor's goal is wealth creation and has a good amount of time horizon of 10 years and above, I think 50-60% in flexi cap, multi cap funds, and the rest can be invested in mid and small cap funds should do the job. But I think diversifying across different funds is a better way to manage risk.
Okay, interesting take there. And since you were mentioning that just with respect to how Q4 has panned out, we saw that the mid caps and small caps again have done better than that of large caps. How do you think that entire thing to be playing out, and then how do you suggest to pick a multi cap mutual fund?
Mahima, this is a fantastic question what you have asked me. Let me give you another data point, for you and for your investors to ponder on. See, historically, if you take on a 10-year rolling basis, okay, 10-year rolling return CAGR basis, mid and small caps have always outperformed the large cap. So from a long-term perspective, I'm very comfortable investing in multi-cap fund, even if it is a lump sum investment. I'm very much comfortable at this point of time because markets have not yet fully recovered. It is still in the recovering stage. This is number one. Number two, we have not yet entered into a bull run. Earning season has been not that great, but it has been decent than the last quarter. We feel going ahead, the earning season is going to be better. Monsoons are going to be very healthy. Thus earning seasons are definitely going to be better. So I truly feel that the best is yet to come. So I'm very much comfortable investing in mid cap, small cap at this point of time, multi cap funds at this point of time. But investors should keep in mind that keep at least a 5-year time horizon, because we don't know when exactly the bull run will start. See, it can start in the next 3 months or 6 months, or it can even start in after a year and a half, right? but I feel we may still be in a time correction for some more time. But I think the best is yet to come. So I'm very much comfortable investing in multi-caps at this point of time.
Got it. And in terms of, this is just a question that I was just thinking about. Do you think that hybrid funds provide a better capital protection, considering everything that's happening around? Because your non-equity, that is your gold and silver, have been on a significant run. How would you place hybrid funds against a multi-cap fund, or would you suggest to park your funds in both of these counters and in some proportionate manner?
Mahima, hybrid funds consist of many different categories within the hybrid bucket, right? There are conservative hybrid funds which are more inclined towards debt. There are aggressive hybrid funds which are more inclined towards equity. There are multi-asset funds. There are dynamic asset allocation funds. There are equity savings funds. So the hybrid bucket is a very big bucket. So one needs to first of all understand that whether you are an aggressive investor or a moderate investor or a conservative investor. Okay. See, if you are a conservative investor and you don't want to take too much of risk, then equity savings fund, which consists which the products which may consist of say up to 15 to 25% equity and the rest into arbitrage, and that suits them well. Debt mutual funds, arbitrage funds will also suit conservative investors. If someone is a moderate kind of a risk taker, then balance advantage funds, also known as dynamic asset allocation funds, also multi-asset allocation funds will suit them. But if you're an aggressive investor, then definitely pure equity funds is something what investors should be looking at this point of time. So it's very important to understand which bucket do you fall into. Are you a conservative investor, moderate risk taker, or an aggressive risk taker?
All right, that's, I think, the answer that I was exactly looking for. And thank you so much, Rishabh, for that answer. And of course, giving us insights on how one should go about multi-cap mutual funds. And thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much, Mahima.
All right, with that, we are completely out of time on this edition of Your Money Matters. Stay tuned to NDTV Profit.